Shares of Microsoft are popping nearly 4% in the after hours after they reported their Q1 results. Shares are trading closer to $343. This one has now broken out of a key resistance level. We'll see if Microsoft can be bought into the strength. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. Microsoft, after reporting Q1 earnings, this stock has been up nearly 38% over the past year to date and is seeing another nearly 4% rally in the after hours. And the reason is simple. Microsoft beat on both their top and bottom line. They posted revenues of $56.5 billion. Estimates were closer to $54.5, so a nearly $2 billion beat on that top line. And EPS beating estimates by a lot, as they posted earnings per share of $2.99, and estimates were closer to $2.65. Revenue growth was at 13% year over year, and then net income growth was at 27% year over year. So both top and bottom line growing extremely strong over at Microsoft. Now, in terms of guidance, Microsoft did guide for their second quarter, which is their upcoming quarter. So Microsoft is on a bit of a different timetable, where this was their Q1 2024, and the upcoming quarter, or this December quarter, will be their Q2. They're guiding in the range of 60.4 to 61.4 billion on that top line. That would imply 15% growth, and analysts were closer to the lower end of the range at $60.9 billion in revenue. Now, Microsoft also did guide for the second half of 2024 for Azure growth to come in at 26 to 27% on a constant currency basis, with an increasing contribution from artificial intelligence. And speaking of Azure growth, the all-important cloud segment grew at 28% in this most recent quarter on a constant currency basis. That is phenomenal growth. Microsoft Cloud overall also grew 23% on a constant currency basis. We just took a look at Google, and their cloud segment grew at just 22.5%. And okay, if you're asking, okay, how come Google grew at 22.5% and shares were down nearly 6%, and Microsoft just marginally grew higher at 24%, and shares are up nearly 4%? Well, it's fairly simple. You come over here, take a look at how big of this revenue segment Microsoft Cloud really is. It's nearly a $32 billion revenue segment, which includes Azure, cloud services, and a portion of LinkedIn and Dynamics 365. Guys, they just grew a $32 billion business by 24%. Google Cloud, on the other hand, is nearly an $8 billion business, and they grew that at just 22.4%. And look, I say just 22%, that is still phenomenal growth, but I think it is easy to say Microsoft is absolutely eating Google's lunch. It's much harder to grow a $32 billion business in that high 20% than an $8 billion business. So certainly Azure is winning the cloud race on every single front, especially compared to a Google. We'll have to take a look at how AWS revenues come in when Amazon reports later this week. Now, on other lines, Office 365 commercial did jump 17% year over year. That's very strong. And in the subsequent quarters, I'm guessing that will be a lot stronger, considering how well Copilot is expected to do on their Office 365 and Dynamics 365 products. Now, it's also important to know that Xbox content and services did rise 12%. And we know Microsoft is going to be completing that deal with Activision in the upcoming quarter, and that certainly will help out their Xbox content and services segment as well. And so I'm excited to look forward to that. But even just 12% growth in this most recent quarter is fairly impressive. All things considered, very strong growth over at Microsoft. Even LinkedIn seeing 8% growth. That's probably on the advertising side of things. And search and news also growing at 9% over at Microsoft. Now, speaking of that Activision acquisition, Microsoft did say that the $61.8 billion all-cash acquisition will be completed in the second quarter of fiscal 2024. So that's the quarter we're currently in. And the revenues from that segment will be reported as part of their more personal computing segment. And so Microsoft really breaks down their revenues in three segments. You see productivity and business, intelligent cloud, and then more personal computing. So in the next quarter, you can expect to see this $13.6 billion more personal computing suddenly jump, and that's likely because of the Activision revenues piling onto there. Now, in terms of this most recent quarter, this was another stellar quarter by Microsoft. Revenues coming in at $56.5 billion. That is up nearly $6.5 billion from same time last year. You see the cost of revenue jumping not even $1 billion. That was up nearly $800 million. And so to generate another $6.5 billion in revenues, Microsoft just had to spend another $800 million in order to draw that top line growth. And then coming down, we see that gross margin is up to now $40.2 billion, up from $34.6 billion same time last year. You see R&D ticked up just marginally, sales and marketing ticked up fractionally, and then G&A ticked up just a little bit as well. And so from $56.5 billion worth of revenues, we come down to operating income of nearly $26.9 billion. That is phenomenal margins. And then net income coming down to $22.3 billion. That is up from $17.5 billion same time last year. Our EPS on a diluted basis coming in at $2.99. And then you see weighted shares outstanding also ticking down, not by a lot, but Microsoft does have that $60 billion buyback in place, and they have roughly $18 billion left to complete that buyback. Moving on to the balance sheet, Microsoft has nearly $80.4 billion worth of cash and cash equivalents. Now keep in mind, the all-cash Activision deal of close to $62 billion will go through next quarter, and that will be reflected on their balance sheet at that point. And so this cash will suddenly dwindle down next quarter. But regardless, even with that being considered, Microsoft is in a very, very strong position from a balance sheet, nearly $200 billion of just current assets and current liabilities sitting at just $124 billion, total liabilities at $225 billion. Microsoft does have nearly $42 billion of long-term debt. And so once that cash sort of dwindles down, that cash to debt ratio will likely fall under 1, but again, nothing to worry about considering how much cash flow this company prints. So we bring down that $22.2 billion net income number, and keep in mind, this is for 3 months. This is not for the full year. This is for 3 months ended September 30th. And so we have that $22 billion of net income. We add back a few line items such as depreciation, stock-based compensation, accounts receivable, and we come to an operating cash flow figure of $30.5 billion. That is up from same time last year of close to $23.2 billion. So again, keep in mind, Microsoft just grew their revenues $6.5 billion, and guess what? Their operating cash flows grew by $6.5 billion. That is how to run a company 101. And so this $30 billion looks like Microsoft used it to really bolster on their balance sheet. You see, they added nearly $45.7 billion in cash and cash equivalents onto their balance sheet, likely because they're preparing for the acquisition of Activision. And so they have that $30 billion. They also issued some new debt, nearly $25 billion of debt they issued in this most recent quarter. And so they gained another $14.5 billion from financing activities. And then they spent roughly $10 billion on property and equipment, bought back roughly $4.8 billion worth of common stock, and paid out $5 billion in dividends. Microsoft is one of those steady dividend growth companies, so you can expect that dividend to continually increase. As you saw, it's up from the same time last year. All things considered, the cash flow over at Microsoft looking very strong. They did bolster on a ton of cash on their balance sheet in order to prepare for that acquisition. And keep in mind, this is a company that's doing $30.5 billion of operating cash flows in 3 months. This whole acquisition cost them $62 billion. Now, I'm not saying they got Activision at a bargain price. In fact, they probably paid a nice premium to Activision, but considering that they generate the price of Activision in operating cash flows in just 2 quarters, for a company like Microsoft, an acquisition of this size, believe it or not, is really not that big of a deal. Even though it is their largest acquisition in their history, the fact that they can make up for that in 2 months on operating cash flows is absolutely mind-boggling. Now, speaking of mind-boggling, that is what Microsoft stock is doing, as it's up nearly 4% in the after hours, trading closer to $343 per share. We'll see where this one opens tomorrow, but it is getting very close to its all-time highs of nearly $360 per share. I wouldn't be surprised if Microsoft does come up here and retest highs of $350, $355, even close to $360 per share. there's not a whole lot of price action at this level. And so certainly if Microsoft does see strong momentum, certainly if the NASDAQ or the QQQs turn, and perhaps we see strong earnings from the rest of the FANG companies later this week, yeah, well, Microsoft does have a lot of room to run. It can suddenly go to 370 or higher in no time. Now, I'm not saying Microsoft is going to do that. I'm not saying it's going to go and retest its all-time highs and make new ones. I'm just saying it's a fairly likely possibility considering how little resistance there is at these levels. Now, it's also a possibility Microsoft comes in here at 345, 350 and gets rejected, perhaps posts a big red candle, at least comes back and back tests this range at nearly $337 to $340 per share. And then perhaps from there, it can see another reversal higher. In my opinion, I think shares of Microsoft at these levels aren't all that exciting to step into, especially if you already have a position in Microsoft, likely at a much lower price point. Now, if you are looking to get into this name as maybe an opening position, again, I wouldn't be too excited to come in here and jump into shares of Microsoft, considering on a forward price to earnings, this is still near 30 times price to earnings. So certainly not cheap. Now, Microsoft does have a lot of secular tailwinds in its business model, considering Copilot and AI and cloud growth. So certainly Microsoft can see strong growth on both that top line and bottom line. Expected low double digits growth on both the top and bottom line. But again, that's what's expected out of Google. And Google is trading near a 22 times forward earnings. So certainly Microsoft on a relative price to earnings isn't very cheap. Now, if Microsoft does come down and test these levels at $312, even closer to $300, yeah, that is where I would first be excited to maybe open a position in Microsoft. Certainly if you don't have one, that would be a point where you could consider adding a share or two. Certainly a stock like Microsoft does see large moves to the upside, but then along with that, it also sees a large reversals in its stock price. And so if you can come in here and have the guts to pick up shares of Microsoft on large declines, well then, yeah, in the long run, you will absolutely make a killing in the market. And I don't see any reason for you to not come in here and pick up shares of Microsoft when it makes large downturns like this, considering how strong the earnings are, considering how strong the overall company is doing. In my opinion, I think Microsoft is a top 5 company in the stock market. They consistently beat estimates over on Wall Street and continue to drive growth. Considering how strong their push into AI has been, I don't see them losing control of this race anytime soon. And that's why I think Microsoft can be bought on any major dips. I wouldn't be too excited to come in here and buy at these levels, but I would keep an eye on Microsoft on any major dips below 310, close to $300. Yeah, those can comfortably be acquired. That was my take on Microsoft Corporation, ticker symbol MSFT. Let me know your thoughts on this one in the comment section below. Stay tuned for Meta and Amazon earnings later in the week. As always, thanks so much for listening, and I'll see you guys in the next video.